Welcome to the Alternatives Mason podcast. With host Brittany Mason, Chief of Staff at Banrion Capital Management, you'll learn how to build alternatives knowledge brick by brick. Banrion Capital Management uses technology to help independent advisors scale and educate themselves on alternative investments. And since education is such a big piece of what we do, we are excited to kick off the series to dive into the nits and grits of the alternative space.
Hi, everyone. It is Brittany Mason, and we are back for another episode of The Alternative Mason, where we are building alt knowledge brick by brick. I am very excited today about a very special guest that we have on this episode. Kelly Ann Winget is an accomplished alternative investment expert and the founder of an Alternative Wealth Partners, AWP, the first private equity firm founded and led by a millennial, openly LGBTQ woman. Kelly Ann has raised close to $1 billion in capital for startups, energy companies, manufacturing ventures, real estate, and other key emerging markets. She is also the author of Pitch the Bitch, host of the Wealth Health podcast, and a sought-after keynote speaker and panelist who has shared her expertise in finance, entrepreneurship, and diversity topics at events like the Alta Expo, Women Working in Wealth, and WE Global Studies Rev-Up Summits. Thank you so much, Kelly, for joining us today. I'm really excited to have you on the show. You're actually our first woman on the podcast we've had as a guest. I'm very excited because, as you know, Banrion Capital is female-led, so always want to give more platforms to women in this space. So thank you so much for joining us. Thank you.
Thank you for having me. We're one of like 10 doing what we do. So it's always exciting to see another powerhouse woman out there.
Yes, we need more women in this space. So I want to jump right in and just really understand what your journey has been, to the finance industry. Were you always interested in finance? Was this always a path that you saw for yourself?
So I was really fortunate to grow up in a household where money wasn't an off the table topic. You're not supposed to be talking about religion or money at the table. That was kind of what we talked about all the time and still do. Both my parents were financial professionals. My mother, CPA accountant. My father worked for PricewaterhouseCoopers for 20 something years. So it was not an unfamiliar topic for me. When I was a teenager, I actually wanted a really expensive pair of jeans. And my parents were like, this is our money, go figure it out on your own. And so I went and got a job in sales. I sold car washes part-time in high school, and was earning about $60,000 a year as a teenager. So, which is pretty significant. And no teenager who's 15, 16 years old should be making that kind of money with like no guardrails. And so I learned a lot, in my formative years coming out of school, that I liked money, and two, I liked figuring out how to make more money. And eventually that led me into the career of finance through oil and gas. Now I'm 5 generations in oil and gas, so I was going to find my way there one way or another. But I did it on my own, and I worked with a company kind of at the height of the oil and gas boom back in 2013-14, when we saw oil prices $130 a barrel last time. The company that I was working for was overpaying for assets, and it threw up a bunch of red flags for me as somebody that's pretty familiar with the industry. And I said, this is probably not the space to be in right now. And about 8 months later, the oil market corrected $30 a barrel. It was pretty bad. But at that point, I had kind of like found a passion behind working with investors, because I came from a high net worth space. And so I just knew how to work with that kind of affluent audience. I worked with startups, real estate firms, basically anything in the private equity space that was raising capital for the last 10 years, helping them navigate the conversations with high net worth individuals. And then also switching later in my career to educating investors on how to source and do due diligence in privately owned companies, because there's not a lot of regulation in this space. And so when investors want access to this, they typically get very little information, and they don't really know how to process that. In 2020, I decided to launch my own firm because I kind of escalated through my career up into the private wealth and family office institutional space. So then I was working with companies that had several $billion under management, and realized that I was the smartest person in the room, which should be terrifying to people. And I took that as my sign of, I could probably just do this on my own. And in the middle of the pandemic, I said, this is a great time to start a business, and started a financial firm in the middle of that. We launched our first diversified fund in June of 2021. It's basically like kind of a trial of all alternatives for investors. They could take a single lump sum of capital invested into a diversified fund, and that fund is invested in 27 different portfolio companies. It's similar to how venture works, except for these are more mature companies, or we're directly invested in tangible assets like real estate or oil and gas. We closed that fund with $17 million in March of 2022, or 2023 this year, sorry. And we're working on an energy fund and some other funds that are more tax advantaged, because one of my passions outside of making money is also not paying taxes on that money. So I'm really, really intentional about structuring our funds and our investment opportunities in tax efficient ways, because we like to make the money and keep that money. And that's kind of our prerogative.
Absolutely. Wow. There's so much to dig in there. That's amazing. You're such a force. I mean, to start a business during the pandemic and to see that opportunity when most people were living in the space of fear, and you went out there, you took that risk, and now you've built this incredible, business. So what exactly about private equity do you feel is the most exciting for you to dig into, and how you gravitated towards that space?
Private equity is really interesting because it encompasses so much, right? Private equity is the asset class that holds venture capital, growth capital, and these leveraged buyout opportunities in the business space, whether it's tech or anything else. I think that for me, what I like best about private equity is the ability to be really creative, because you are in complete control of that deal at whatever phase you're invested in. If you're the first money in the door, in most cases in venture capital, then you can be really creative with that company of how you're going to be partnered with them, whether you're going to be a passive partner and just being a capital person, or if you're going to be an advisor and be part of the growth throughout whatever phase they grow into. We kind of focus in the growth space just because I want companies that are a little bit more mature. The owners have more blood, sweat, and tears involved. So it's not like, here's my idea on a napkin, let's go get this funded. It's more like, I've poured my entire life into this for the last 5 years and have now broken over even. And so please help me scale. I just feel like there's a lot of synergy in that space for me. And that's why we invest a lot of money there. That's what I love private equity for that.
I love it. And it's amazing, that you found that so early on as well, and that it's so important, that we teach children at a young age and build that foundation with that relationship with money. It dictates so much of, the fabric of our life. It's just intertwined with so many areas of our life as we, grow and get older. And
yes.
So I think it's amazing that, you grew up in that kind of environment, in that household, and you learned at a very young age the importance of money, and to be making 60,000 at such a young age, that is just remarkable. I mean, there's many adults that don't have, those types of jobs, especially right now with such times.
Well,
So
sales do that. I mean, if you talk to anybody about where do you make the most money, it's in a sales position. I mean, at the root of it, all financial services is sales, sales and service. So those are the types of things that I've been in since I started my working career at 15, was sales and services. And it's about recognizing somebody's need and having a solution for that. And so you just take that mindset into any industry that you're in. And so with my firm, that is what we're doing. We are recognizing a need, people wanting options outside of the stock market.
yes.
Transparency and room to understand without pressure, and the support through how that investment grows. And so that is the service we provide, and we sell it to people because no one knows anything about it. If you were to Google alternative investments, like you're going to get the same like 3 regurgitated articles from Investopedia that's like, it's not stock sponsored cash. It's like, okay, but what does that mean? And how do I get involved? And so I try to do a lot of education, like the speaking and things that I do is about just, here's this space that exists. Here are the qualifications for you to be able to participate in this space as an investor. And even if you don't have $1 million, there's still alternatives that you can invest in outside of the stock market. Real estate doesn't have a barrier of entry. Precious metals doesn't have a barrier to entry. Art, wine, collectibles, cryptocurrency, there's no barrier of entry there. So you can get really creative with your portfolio outside of your 401k and your retirement accounts and your savings accounts and these types of things. And you don't really need to understand that space because most people have an advisor that does that work for them. It's an interesting thing because there is definitely a shift in the investor mindset for more impactful investing. People are more intentional with the investments that they're making. And so several of our venture investments we've made is focused on data and access to customizable portfolios. So we have technology that can actually take apart a mutual fund or an ETF or whatever, and actually pull out things that you don't support and keep the ones that you do, so that you truly have a custom portfolio that matches your wants and needs as an investor. And on the data side, actually knowing what you want and need is hard. You don't know where to start, what questions to ask yourself. And so we've invested in a company that helps you create that profile. Then you have a tangible dashboard of yourself, right, that you can then give to whoever you want. That's your piece of information to give out. And then you can have the service professionals provide you the services that you actually want and need, with you in control of all that information. So it's a cool space to be in.
Did you have like an aha moment where you were like, this is missing and this is why I have to do this?
Because I've been exclusively in alternatives for 13 years, when there started to be kind of this buzz about venture, and now especially there's a lot of women's investment clubs and things trying to learn how to invest in other things. It was kind of like, oh, okay, I've been in this space for a really long time. I thought everybody knew about it. I just thought it was gatekept. And but its reality is like no one knows about it. It's more than just being gatekept, like it's very intentional about how they're keeping the masses of everyday millionaires away from these kinds of generational wealth building assets, energy infrastructure, these types of things. So it was definitely 2020 was my moment where I was in a room full of people that were worth a lot more money than me, managing a lot more money than I'll ever manage. And it was like, okay, there's a problem here, and I'm gonna solve it by just telling everybody about it.
But I love it. So a statement that you have said, and it's very powerful. So you talk about money is powerful, but in the hands of women, it is even more powerful. So can you elaborate on that?
Sure. So there's definitely a difference between how men invest and women invest. And it's not necessarily a bad thing, but women over the lifetime of their investment will earn more than men just because they're more patient and they've made a decision and they stick to it. So they don't move money around as much as men do. Men, of the two emotional beings that we are, men are very emotional when it comes to their investments. And so when there's something crazy going on in one place, they have a tendency, if there's liquidity in their investment, to move it around out of panic and or not understanding or whatever. They take bigger risks, so they have higher returns in that sense. But as far as like the stability of their portfolio over their lifetime, they will lose money because they move it around a lot. So it's kind of interesting to see that. But the one thing that makes women powerful when they have money is that the decisions that they make are more long term, and also they reinvest more of that capital. So almost 90 cents to every dollar a woman invests gets reinvested in their community, compared to a man's, like I think it's up to 30% now, but it used to be like really low. It used to be less than 10 cents that men would reinvest in their community. So these are the two ways that money can be moved around and create significant change globally, society, whatever, is that women are more intentional with their money. And that is where that power comes from.
Yes, we are. So have you had any challenges being a woman in this industry?
Yes, yes and no. So I know it's a really difficult capital raising atmosphere right now for anybody that's out there raising capital on funds or even their own startups, things like that. They're having a really difficult time fundraising, especially if they're women, especially if they're a minority. But for the most part, we don't have that same struggle. One, because I'm dealing with both old white men who have money and everybody else, right? And traditionally, I've raised a lot of money from old white men, and it doesn't make that bad or different or anything. It's just I look like their granddaughter, so it's really hard to tell me no. So
You use
there's
it to your advantage. So you use it to your advantage.
yeah, I mean, I'm able to bridge this gap between the emerging manager that they have in their mind, right, that might be scary, to the access of I can take their money and they get to benefit from the investment, but I also get to take their money and partner it with people who haven't had access to this asset class to give everyone the return from the assets that we have money to buy with. So I take money from both sides of the aisle. I take money from all walks of life. And that's because I can work with any person. I don't care as long as they qualify to invest in the investment. I did a lot of it work last year to change our limited partner makeup from a majority of old white men, right, which is necessary, to more minorities. So about in earlier this year, we flipped from 60-40 old white man to 60-40 like diverse women. So that was really exciting because now I have like our energy fund, we invest in oil and gas, is almost, I think there's 3 men in there and the
Wow.
rest are women, which is really cool to see, because these were people that never knew this asset existed, or they knew it existed but didn't know how to invest in it, and thought that only people in Texas got to invest in oil and gas. And so it's really interesting to see the switch, because there is definitely a hunger out there for people to invest, and there's almost 30 million millionaires in the United States, and they're not all white men.
Right. Right. Yeah, we need more female advisors. We need more women in the industry to be able to establish those, relationships, because so much of this is, based on your relationships, human relationships.
Yeah.
So can you share some more insights about, women investors, and their impact on the financial industry, and where you see, trends of more women developing in different spaces in finance?
Yeah, you can see a trend starting as far as like popularity and like headlines, when you see people like Serena Williams starting a venture capital firm, Kim Kardashian launching a private equity company, which I think is really just making sure that she can invest in the things that she wants to invest in, and not get in trouble with the SEC for promoting blockchain. But I think that there's a lot more popularity around it, because you have kind of big name celebrities starting to be more public about the things that they're doing with their money, which is really cool, because women aren't brought to the conversation at all anyways. And so that has shifted. I've been doing this for 13 years. So probably in the last 5 years, it went from me only speaking to the husband about investment opportunities to now speaking to them individually or as a couple. So that both of them are involved in some way. And the interesting thing that happened when I launched my fund was I was speaking to couples a lot. And what happened was that the man would invest $50,000 and his wife would invest $200,000, just because they were brought to the conversation from the beginning. And while the husband wanted to support it, understood the investment, the other person was like, no, I totally get this and I trust this person, right? And that's the shift. It doesn't change that my male investors who fit, the traditional makeup of somebody who's investing in high net worth alternative options, they want somebody different too. It's not the same as, oh, I want to go out to the golf course with my buddy's son's firm, right? It's like I've done that. I have investment there. What else can I do? And that's what I'm seeing a lot of. It's just seeing a shift of people being like, you know what? I don't like what I'm doing, and there's got to be something else out there. And social media definitely helps with that. I'm a big fan of like the information access now. I think that that's the biggest shift from, like, if we look back 10 or 15 years, and the amount of access you had to information to today, when you have like in real time information from people, is like really exciting. And I think that that's kind of what's lighting a fire under women's rears to like get into gear, right? I've got to start learning about financial literacy. I have to start figuring out where my money is. I mean, there's the big headline that's talking about the $30 trillion shifting over the next 10 years, the greatest wealth transfer in the world. And that's all, I mean, a majority of that is going to women. When you go to a financial advisor and it's a husband and wife, the husband passes away, because typically we outlive our male partners 6 to 10 years. It's a ridiculous amount of time. They go to their advisor and they're like, oh, well, John had you set up and we have John, like John had your best interest in mind. It's like, well, John's not here anymore. So like, what are my interests and what are my goals? And like, what do I need in retirement for the next 10 years? And that conversation is starting to be had after the person passes away instead of the entire time they were alive. And I think Ellevest is an investment platform created by women for women. So if you're a woman out there and you don't have an advisor, you don't like your advisor, like check Ellevest out. You can start at a basic level where you are kind of on your own, and then you can move up into an advisor or a private wealth team. But what they're focused on is when people's partners pass away, I think it's almost 85% of women within the first 6 months will leave the financial advisor and sit in cash. That's women's biggest problem, is that they're constantly just sitting on money. And they could be really powerful if they started investing it well.
And they don't, because majority just don't know what to do with it, right? So where do you feel, what are your suggestions then for women out there listening, that are, because I do have a lot of listeners that the finance industry in general is foreign to them. I only made a move over into the industry a couple of years ago myself. So I know that there are a lot of listeners that they're just learning along, as they're listening. So what kind of advice and recommendations do you have for women out there that are just starting to learn and maybe feel overwhelmed by all the information out there?
There are a lot of resources out there. It depends on where you are in your financial literacy journey, right? So I wrote a book, and that book is mainly for people who are, they understand budgeting, they understand saving, like what is next, right? There's financial literacy, and then there's like the next step. You have a job, you have these things set up, like what is the next step? I think that if for your listeners, it's really about finding someone that you trust, whether that's a financial advisor or I'm a really big fan of just getting a really good CPA. Like get a really good tax person, because that person's going to be the most boring person in your life. And also probably one of the most honest. CPAs have a code of ethics that's just really important to them. And so when you get advice from a CPA or a tax person, it's going to be real. It might be disappointing and boring, but it is definitely like gives you a reality check of where you are financially. And then you can take that information to somebody more creative, like a financial advisor, an investment advisor, et cetera. I'm on the wild side, right? You have a piece of your portfolio that you want to invest in alternatives, you don't know what to do, but you want to have some risk and you want to invest in something different. Like that's where we belong. But we are not 100% of a portfolio. We're like 10 to 25% should be in alternatives, and that should be spread across a bunch of different assets. So just like keep that in mind as far as what is your net worth and how much risk can you take. If you're younger, you can take more risk because you have more opportunity to make more money. But if you're older, you want to take less risk because you don't have the same opportunities to make more money in your lifetime before it's too late, right? There's a couple different things, and I'll send you the links to it if you want to like give them to your audience. One of the companies that we just recently made an investment in is a company called Knowme. It's KNOMEE.com. And it creates your financial portfolio. So like, or your profile. So who are you as a woman, as an investor? And you can take that information. It shows you a lot about yourself, and you can take that information to a financial advisor. I'm super biased, and I think you should go to Ellevest if you're a woman, just because women there who understands what it's like to be a woman investor and the different things that you have to overcome being a woman and making money. You work less, you make less money, you have to work longer, like into your into retirement. You have to take time off if you're starting a family. Like there's a lot of nuances to being a woman and how you should manage your money over time. And so they're really good at that because they've just collected years and years of data behind that to create the investment algorithms behind their portfolio structures. So really cool tools there. That's a starting place. I'm not an advisor. I'm super biased to the things that I invest in. But if you want to have really creative conversations about the things that I'm doing, like let's go for it. But it's definitely something we partner with people's advisors, and whether they're a tax advisor or a financial advisor.
Mm-hmm. Mm-hmm. So I want to talk more about your book.
Mm-hmm.
It's rich. So
Yes.
what was your inspiration for writing this book?
So if you're familiar with the movie Boiler Room from like the 2000s, it it's based around like a brand new broker on the stock market, and he comes in and he's being trained by an old guy in the market. And so one of the first scenes is rule number one: you don't pitch the bitch. If you get a woman on the phone, you just hang up, because they'll call you if the stock's up, they'll call you if the stock's down. They're a pain in the ass, right? And so the phrase is don't pitch the bitch. And this has been said to me in real life.
What?
Like, yeah, that's been said to me in real life, like in training sessions, and how they're like working with people, like selling investment opportunities, right? In the broker dealer space and in general in the private equity world, is like, yeah, you just don't deal with the wife, don't pitch the bitch, right? This is like a phrase that's like very well known. And
Wow.
so I never understood that, because I would spend all this time working with the husband on through an investment and come out of it with, I don't know where the checkbook is, I don't know what bank account we should use, like, etc. Right. And so then they have to pull their wife on the phone, and the wife's like, who are you? What have you been talking to my husband about for 3 weeks? And like, who is this person on the phone? And like, no, we're not making this investment, like, go away. And the reality is that if you just included them from the beginning, they would have had time to hear all the information, ask questions, and feel comfortable about saying yes or no. And so throughout my career, I made it a point to like talk to women and talk to minorities and talk to people who may or may not have an accent. And the reality is that it's dark on the backside of the finance space. And so it is an extremely racist, prejudiced, terrible, sexist place. And so when you're raising capital and you're having people in the background being like, I don't want to talk to foreigners, I don't want to talk to women, they have a black sounding name. Like, these are really aggressive things that are being said in sales rooms for people who are supposed to be helping people access investment opportunities. So that's what I experienced early on in my career. It's gotten better because a lot of the large firms anyways are doing a lot of DEI work, but in the private boiler rooms that are around the country, like it's the same thing. So when I decided to write the book, Pitch the Bitch made the most sense, because it was like, you know what, you should be pitching the woman. Like, you should be pitching the bitch. Who cares if she's that way? Because she has every right to be upset.
Yeah.
So, I had some feedback from a couple of my colleagues and stuff, like, it's a really aggressive name. And I was like, it should be aggressive.
Yes.
It's very, when you get into the book, I do not sugarcoat anything. It is, here's the information, here's how you take action with it. It's not necessarily, here are the things you need to be investing in. It's more like, think about your retirement this way. Are you set up correctly in a bank account? Like, are you at a place where you should be in a private wealth account or not? Does an online bank make more sense for you if you're younger and you're not needing to go into a bank or have hands-on help with a banker? And also educating people about, hey, there's other people out there doing big things outside of Warren Buffett. So,
Yeah.
like, care about what other people are doing also. And so it's just a very raw book of like, hey, it's okay that you don't know this information. It's been on purpose. Here's how it's been gatekept over time in different ways, how to recognize when somebody is like gaslighting you into this stuff, and go forth and be wealthy is the point of the book.
That's amazing. I can't wait to read it. I
I'll
mean,
send you a copy.
yes, please. I definitely want to read it. I mean, I think that for women, obviously in society, we've had to traditionally be the nice girl and be polite and the lady and blah blah blah. And so I think the only way to really make serious change is, like you said, just go head on and and have that bravery, that courage to speak truth. And it's the only way we're going to see change and evolution in the industry. So
Yes,
yeah,
it's not necessarily like act like a man, but it is definitely have the same confidence.
assertiveness.
Yeah, just as what I like to call a mediocre white man, who can go into a conversation and just ask blatantly for something they absolutely do not deserve and get it anyways. So women, we try to overcompensate. So we won't ask for something unless we feel like we are overqualified for it. There's
Mm-hmm.
no way we could get a no because we should be asking for more, but I'm only going to ask for this because I know that I could get more, but this is where I'm going to come in at my threshold. And the reality is that you should just go in absolutely ridiculous because you are 100% overqualified for the ask, and see what happens. And I think that if you can go in with that confidence, that it's going to be accepted by the right people.
Yeah.
There are people who are going to dig their heels in and be like, well, she's, bossy, right? Or whatever other word they want to use. But there is a shift in
Yeah.
leadership where it is wanted and needed that there is leadership that looks like us.
Absolutely. Absolutely. And how do you see, you talk a lot about, innovation and bringing more diversity in, and that's such a key component for your work. What ways can we, create a more diverse environment in those boiler rooms, in those rooms that, you're talking about? How can we make those changes in there?
So an interesting fact is that like women go into financial professions this at the same rate as men, but
Really?
they do, but about I think their average time in is about 5 or 6 years, and about half of them drop out.
Okay.
And that's because they're getting stuck in relationship roles instead of getting promoted into management roles.
Mm-hmm.
So when you go into a financial firm, and I'm talking from just like the advisory space, they're going in as like an analyst or like a customer person or a client at relations, and they get stuck there as like an assistant, and they're not elevated or given the same opportunities when a male's going in and immediately being, VP of whatever, which in the finance world means nothing, but VP of whatever. And so they're stuck in that kind of grind. And so then they want to start families, and it doesn't make any sense for them because they're working so much for no opportunity. So then they drop out. I think that there are spaces that are being created now that have a support system for women who want to go into financial professions. So about finding your community, finding your tribe is going to be a lot easier now because they're popping up everywhere, which is amazing to see. But there is definitely space for women and minorities to find community here.
Mm-hmm. I have to just share this just this morning as I was getting ready. I had a terrible troll come onto my page, and I'm sure you've dealt with those yourself. And just said some pretty terrible things, about obviously the way that I look, and that, oh, there's no way I could actually be working in finance. There's just no, and what do you have to say to people like that like to be critical of women like us in the industry?
Well, that person probably doesn't have any money, so it's not like you could help them anyways. So, I mean, it's really just like don't waste your time, because the people that are going to be saying these things can't work with you anyways.
Yeah.
Um, and they can find someone else who will listen to that, I guess. I get a lot of like the victim mentality, right? Whenever you're talking about women receive less than 2% of venture capital funding, women can't get their startups founded, like all these types of things. It's like, it's not a victim mentality. It's just fact.
Facts, right.
That is happening. The reason why that is happening is not because she's a woman. It's happening because there's a bias because she's a woman. Like it's a different narrative, and those people will just never understand, and it's literally just a waste of time to try to explain it to them.
100%. No, I don't engage with people like that, but I do find it entertaining that here we are approaching 2024 and there's still this mentality that women are not capable of being multidimensional. It just really blows my mind that we are still having these conversations, and but it's going to just take more women like yourself speaking up and showing up in those rooms and making space for other women and that support system for other women to also come in.
Yeah, I think it's a conversation to be had with men, because realistically it's
part of the conversation.
Yeah, you can't sit there and have a conversation with me because you're distracted by the way that I look.
Yeah.
Like, that's a you problem. And you should be aware of that. Like, if you can look here, then we can have a conversation about money that is your money and is important to you. I don't care about your money, right? Like, I'm trying to care about your money, but you are not caring about here. So, that's something that they have to hold themselves accountable for. And I'm fortunate enough to have the privilege to be able to be open and crass about it. But I do understand that, like, most of the world, that's a dangerous situation to be in. And one of the things that is super interesting actually is you have an entire industry of like OnlyFans women, okay, who make millions of dollars a year. Millions. They do not have any financial representation because they are not comfortable in a room with the people that are managing money.
Right.
So they can't go in there and be like, hey, I made $10 million this year. What should I do? Because the guy's like, oh, well, how did you make $10 million? It doesn't matter. It doesn't matter. How do I invest my money so that I don't, like, if I don't want to do that anymore, I don't have to, or I can continue doing this, but I can also do this. There is a company out of Northern California that's called Stripper Financial.
I was about to mention her.
Yes.
I listened to Lindsay's talk at Jolt's.
Yes. She's cool. I met her at the American College of Financial Services Women Who Work in Wealth conference. And I just thought that was so interesting. And I was like, see, there are people out there. There's not very many, but the truth is that if you want to engage with other people, like, you have to get over yourself. So if men want to have better practices, they have to look internally, and they gotta
get over that male ego.
yeah. We're all in this together, and no, it's a thing. I'm trying to be as vocal as I can, because I do know that it's not safe for a lot of people to do that. And I don't really care if they don't like me. So, because a lot of people do, and they write me big checks.
And that's what matters most. Exactly. So, I like to say, you don't necessarily have haters, because, you either love me or you love to hate me. Either way, you're, and I'm going to be laughing at the bank, baby. So
yes, exactly.
Exactly. So, gosh, I can't wait to read your book. But that is funny about Lindsay, Stripper Financial. I find her very fascinating, and I do think there's just going to have to be more women, that are just going to just go for it and not care what people think about them, and and that's how we're going to really see the change.
Yeah, I think the Barbie movie is helping.
Oh my gosh, the Barbie movie! Have you seen it?
Yes.
Love it. It is so good.
I think it can be as deep as you want it to be, which is the coolest part of it, because it can be, for people who don't want to think about it that much, it's just an entertaining film. And the women who are like walking away being like, I have to change my entire life. Like that, the movie is exactly what it needs to be.
There's a tremendous amount of women that are leaving abusive relationships because of that movie. It's
Yes.
amazing. I mean, it's yeah, it makes me a little emotional thinking about that. Like that is it's amazing. The movie was incredible. I actually went back to Indiana. I'm from Indiana. I saw my grandmother while I was there. She just turned 90. And
Oh,
so we went and saw it together and dressed in and
that's amazing.
it was amazing, and she loved it. She loved it. So, but that movie, I think, I'm really glad that you mentioned it because I think that they so brilliantly on every end of the whole film. From the writing, I mean, the script, the plot line itself, the production, the marketing, everything. I mean, it was just absolutely brilliant, and the fact that they really leaned into all of these stereotypes and didn't shy away from all of the criticism that, and the controversy that Barbie has had for so long. I
Yes.
think that was the right way to do it, so you got to embrace those things. And so, yeah, it
But
was really awesome.
there's one of the interesting parts was the way that Mattel allowed them to like portray Mattel, which
It was
was really cool. They let that happen. And that's a self-reflection thing. Like we're this massive conglomerate that has this opinion, like we should be like shown that way. And I thought that was really cool. My sister's feedback was that she loved the movie, except for at the end, Barbie was still like having to say sorry to Ken, and Ken never apologized for like ruining Barbie Land. And
oh
was just like, it's okay that you're sad now. It's like, but wait a minute, there's no accountability. I think that my sister she was like, yeah, Ken had no accountability for anything. I was like, I think that's kind of the point though, right?
he's got to go and discover who he is, now and make his own way because he is his own person and not identified by Barbie.
Yeah.
So I thought it was really cool how they just flipped that whole script.
Yeah. It was really well done.
It's one of those movies I'm going to be rewatching and watching again and again.
Yes. Like Mean Girls. Mean
Yeah,
Girls is me.
it's an instant classic, instant classic.
Yes.
So, a few more questions. How does AWP provide access to, digestible information about your investments?
So we provide, like, I'm very open about the different things that we're invested in. I'm very active on LinkedIn. So just like my goal is to have people think about assets in a new and creative way, like outside of the box, so that they're not just looking at them in a traditional sense of like, okay, I'm going to buy this mutual fund and it's going to sit in my retirement account, and then it'll compound over time, and then when I retire I'll have $1.5 million, and my $1.5 million will carry me through my death. And the reality is like that's not true. And there's all these like global political things going on that affect each type of asset class, whether you're in the public space or the private space. And it seems really overwhelming, but I think our goal is really just to say it's okay to take your time and go at your own pace digesting this information. But here it is, and like here's the resources to dig deeper. And then obviously I'm super accessible. I try to be as accessible as possible to our clients, but also people who just want to have a conversation about it. I'm on TikTok and stuff, so I've had a couple conversations with people that have scheduled calls with me from TikTok, and which have been really interesting. One woman was up from the Northeast, and she said she had been emailing private equity companies for like a year, trying to figure out like what's the process of selling a company, because she owned a children's publishing company. And she was like, I just wanted to know what the process is. And I was like, well, here's our process if we were interested in buying a company. And she was like, why didn't anyone give me this information? I was like, I don't know why they can't send an email. It takes 2 seconds.
Yeah.
And it doesn't matter like whether you're managing a couple $1,000,000 or $1 bajillion. Like there's someone on your team who can answer a question to somebody.
Right.
And so I think that that's our biggest thing, is just remaining accessible to people who have questions. And then obviously our funds are structured so that they have access to a bunch of different things. Diversification is at the base of our strategy. So our diversified fund across is invested from oil and gas to venture. Our energy fund is invested in small owner operator wells to publicly traded Exxon Mobil operated wells. So, and in different parts of the state and country. So they get a lot of diversification inside of the funds without having to put $100,000 into each individual portfolio company or asset. So that's how we give access. We try to make it understandable because we spend a lot of time talking to our investors about what we're doing.
That's good. And building those relationships with them, and it's all about trust. And
yeah,
so well, what about other emerging trends in industry? What would you say that you see as far as good things to keep an eye, good funds to keep an eye on as far as to diversify your portfolio? What's emerging trends?
Well, personally, I'm like a big pro-America, small business supports our economy. We should be focusing on, domestic growth, and that's kind of my whole MO. So for me, my investment focus really is in the manufacturing space, the infrastructure space, and energy. So anything that is in that space is really interesting for me. I think that we're going to see a huge shift in the bringing things back to the United States. We have the power to be completely independent as far as our energy sources go. And that's including the renewable space too. I'm 5 generations in oil and gas, but that doesn't mean that I don't want to see a transition. It's absolutely a requirement. However, we have to still invest in the infrastructure that exists today in order to fund the infrastructure of tomorrow. And it's going to be very expensive. And the only way you can do that is if you have cheap oil. That is the only reason why we can power build anything. So when oil's at $80, $85 a barrel, it's very expensive to try to build new infrastructure. When oil's at 30, 40, oil companies are still making money at that amount of money. They can then fund the transition into things like natural gas, wind, and solar. But we can't do that unless we invest in today's infrastructure, which is not going well. It needs to be replaced. It's a bajillion years old. If you watch people like Warren Buffett and what they're doing in the background, he bought the largest natural gas pipeline last year. So he's extremely invested in natural gas. I do have bragging rights that when oil went -40 in April of 2020, I bought a bunch of Occidental stock. And he bought it a year and a half later. So I'm up 360%. Thanks, Warren Buffett.
Love it. Who are your other favorites in the industry that you follow?
I mean, I'm definitely a fangirl of Sally Krawcheck, who's the founder of Ellevest. She's a Citibank, Merrill Lynch, private wealth. She is the epitome of private wealth on Wall Street. And if no one knows about her, which is so ridiculous, but she is a true force of nature when it comes to pioneering for women and access to money. So she's definitely one of my favorites.
Well, we are running low on time. I have one more question for you, and if you'd like to add anything, of course, please do. But how would you measure your success as your role as the founder of your company?
I think it was definitely a milestone to see our LP makeup switch this year from a majority of white older men to a more diverse LP makeup. And so that was really successful for me, because the whole reason why I built this company was to create access to an entire group of people that never had access to these assets. And I think that we're on track. So, I really am impact focused. It's the profits are great, but I truly believe that if you're doing what's right for the world, that the profits will come too, and you don't have to forfeit one for the other. So that's what I view. I want to continue building things that make society better and profiting from it.
Well, thank you so much, Kelly. That is very meaningful, and you've just been such a joy to have on here. It's been so great to chat with you. Thank you so much for all that you do and supporting, more diversity, more women in the industry, and thank you for being a pioneer yourself. So it's been great to have you on.
Thank you, Brittany, and thanks for having the platform that gives people a voice.
Of course, thank you. More women, more diversity. Let's go,
Yes.
everyone. And be sure to get your copy of Kelly's book, Pitch the Bitch, and follow her and Banrion Capital on social media. We're all on LinkedIn, YouTube, Twitter X, whatever we're calling it these days, all of those things. And we will see you next time right here from the green couch. Thank you so much, and have a great day, everyone. Bye.
The opinions expressed in this program are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual or any specific security. It is only intended to provide education about the financial industry. To determine which investments may be appropriate for you, consult your financial advisor prior to investing. Any past performance discussed during this program is no guarantee of future results. Any indices referenced for comparison are unmanaged and cannot be invested into directly. As always, please remember investing involves risk and possible loss of capital. Please seek advice from a licensed professional.